Are mortgage rates starting to squash buyer demand in Portland metro real estate? Let's take a look at the numbers. Welcome and thank you for joining me today. If you are new to the channel, I'm RRMilligan and I run through the biggest stats and trends that we're seeing right now in Portland Metro's real estate market. That's for all of Portland, all of the neighboring communities, plus Southwest Washington. I'd love it if you would consider giving a like to this video or even subscribe to the channel. And with that bit of business out of the way, let's get into the very latest stats and trends. First up is the average sale price. If you've been keeping track of these reports, you know that we saw about 1.8% appreciation for the entirety of 2024. But on the other hand, the average sale price for December was down about 1% compared to December of 2023. The average sale price has been back in positive territory since the start of the year. So far in January, the average sale price is up about 5.5%. That's higher than most of what we saw last year. So I definitely like to see a couple more weeks of numbers in this range before I get too comfortable with this number, especially with the high mortgage rates that we've been seeing over the past few weeks. Next up is supply. We did see a large number of new listings hit the market, but I think that's the result of listing agreements expiring at the end of 2024 and then getting renewed after the new year. In support of that idea, about 2 weeks ago, the number of expired listing agreements was up by a whopping 888%. Not a surprise for the end of the year. On the other hand, we saw the number of homes hitting the market increase by 164% and 72% over the past 2 weeks. So we shouldn't be surprised to be seeing a lot of listings new to the market, even though they're probably old listings from 2024, repackaged and relisted as if they're brand new. On to demand. Buyer demand did come in a little bit lower than last year at this time. The number of new purchase contracts agreed to by buyers and sellers was down about 11% compared to last year. And this is one of the few times since about September that demand has been below last year's numbers. And I think that this has been the result of the higher interest rates that we've had for the past few weeks, making affordability a real problem for buyers. So let's talk about foreclosures. I have been keeping my eye on the foreclosure numbers. Often banks will take a hiatus on issuing foreclosure notices during the month of December, which can result in a jump in the numbers in January. I just haven't seen that happen, not yet. The number of foreclosures and pre-foreclosures currently on the market has been pretty much flat, and the same can be said for the numbers of notices of default, which is one of the first steps in the foreclosure process. I will be watching to see if those numbers start to increase as we go forward. So let's talk about mortgages. Pretty much the big story each and every single week. Mortgage rates were on fire this last week, hitting the highest rates we've seen since June of last year. The average for the 30-year fixed was somewhere around 7.25%, and the best rate I could find at the start of the week was about 7%. Most lenders were at 7.25%, pushing 7.5%. We did have a couple of lower than expected inflation reports come out this week, which helped us out and caused rates to recede. On Thursday morning, the best rate I saw advertised for the 30-year fixed was 6.875%. So what's waiting around the corner for us? Well, we have the Fed Board's January meeting on the 28th and 29th, but no rate changes are expected for this meeting. Following those couple of benign inflation reports that we had this week, the 10-year Treasury dropped by about 16 points in just a couple of days. Of course, the 10-year Treasury is one of our best indicators of where mortgage rates are headed, so mortgage rates may inch down a bit more by Friday morning and hopefully continue on to the next week. As usual, if anything changes before I post this video on Friday, I will put the information right over here. Well, that's the roundup for this week. Thanks a million for watching to the very end. Again, I'd love a like or even a subscribe or a share if you found this video informative or helpful. And I look forward to seeing you right here next week.